So having completed the cash from operating activities, we're now going to look at cash from investing activities. Now with the operating activities, that was all about the income statement. So we use a lot of information off about that. For the cash from investing activities, we're looking at our non-current assets. Our current assets of our bank, our accounts receivable, inventory and prepayments were all used when we did operating activities. So we can tick those off as used. We're now going to be looking at our PPE and our shares in New Zealand here. For this, we also need to take over some notes as well. So for example, our PPE note. And the additional information is a good place to look at some hints about some of the cash flows for investing. And we're also going to be using our equity section. So I've copied all those over to here. So we're going to start off with the first non-current asset, and that's our property, plant and equipment. So for that, we go down to our property, plant and equipment note, and we're going to look at each asset separately. The first one is land, and we can see in 2019 it was valued at $80,000, and in 2020 it was at $100,000. So there's been a $20,000 increase. So we just need to check down the bottom to see if it says anything about land. No, it doesn't. And then we also need to think about how land might increase. Now, one way is that we could have bought more land, but the other way is that we could have had a land revaluation. To see if there's been a revaluation of land, one of the places to look is our land revaluation surplus, and we can see that our surplus has gone from 20 to 40, so that's increased by $20,000. Now, because land here has increased by $20,000, it's telling me that all this land value increase was just a revaluation. There was no cash flow associated with that. So I'm not going to put it in my cash flow statement because that's a non-cash item. It would be counted as a foreign item in our cash flow statement, and we don't want to have those in there. So we've dealt with land. We've discovered that the increase is non-cash. It's just a revaluation, not a purchase. The next one we're going to look at is buildings. And here it's got 320. And here in 2020, we've got 400,000. And a note here says there's been an extension was added to the buildings. Now, there's nothing to give us any indication that we have done anything else, like sold buildings, or there's no building revaluation surplus here, so it means we haven't revalued them either. So this is a nice, straightforward 320 to 400, so that's 80,000. So that's going to be a application of cash because we have spent cash on this new extension, and that's going to be 80,000. So that's buildings ticked off here too. We're now going to look at equipment. And we've got an additional information here, and it says equipment costing $32,000 with a carrying amount of $26,000 was sold. So we know that we've sold equipment. And if we look here, we've gone from $116,000 worth of equipment to $130,000 worth of equipment. So we must also have bought equipment along the way too. So once again, we're going to do using our equipment account as a tool here. So I'm going to start off by putting my balance in here. So my opening balance for equipment was 116. Debit, since it's an asset, my closing balance for equipment was 130. It says here equipment costing 32,000 was sold. So that's that historical cost, and our equipment account only shows the historical cost. So I'm just going to put in here sold. So that's going to take my equipment down 32,000. So that took it down to 84. That's it. So therefore, how much new have I paid out for? What have I bought to take it from 84 up to 130? I've bought $46,000 worth of new equipment. So here, my new equipment was $46,000. Right, we also know that we've sold equipment and we need to work out how much we've sold it for and what cash we've got. Now the equipment costs $32,000, but this is what's important here, and that's its carrying amount. So the carrying amount of this equipment was $26,000. What we need to look now is there been any loss or gain on sale? And where to look for that is in our income statement. And if we look under expenses here, we've got loss on sale of equipment of $16,000. So at a carrying amount of $26,000 and a loss on sale of $16,000, so we must have actually only received $10,000 for it. So here under cash was provided for sale of equipment of $10,000. Right, so we've dealt with land, buildings and equipment, so we've now dealt with our whole PPE. The other item here is shares in Air New Zealand. Now it says here they went from 25 to 45,000. So I'm going to reconstruct my ledger account again. My opening balance is going to be 25,000 and my closing balance is going to be 45,000. Now, I could do one or two things with shares. They, like other non-current assets, like land and buildings, can be revalued. Now, to find out whether they've been revalued, we need to look at our other income section of income statement. So if I have a look at my note for my other income, it does say here there's been an increase in the fair value of financial assets of 7,000. So I've recognised on balance day that these shares in Air New Zealand were worth $7,000 more than they were the previous balance day. So that is a non-cash item here. It's just a recognition of balance day that they've increased in value. So that's 7,000 increase. So that takes my 25 up 7 to 2,000. But my closing balance is 45, so that's indicating to me that I've also purchased more shares as well. So that's $13,000 worth of shares that I have purchased. So here's my items there from there. And it's an application of shares of the cash of 13,000. So we've now considered our property, plant and equipment, and we've looked at our shares in New Zealand. So we've covered all our non-current assets. So we've now completed our cash flows from investing activities.